In Europe, the big story is Portugal's request for a bailout. Caretaker Prime Minister José Sócrates made a televised address late on Wednesday. Portugal is now the third Eurozone nation to seek a rescue. We don't know exactly how big the package is going to be, but European officials say that it may be as much as 75 billion euros. Let's talk more about Portugal and the outlook for the single currency with Astrid Schilo. She's pan-European economist at HSBC. She's here in London. Astrid, what's your reaction to Portugal asking for help?
Good morning, Lindsay. Well, of course, you know that markets have speculated on that for quite a long time. The precise timing is always a bit of a surprise. But as I said before, it was largely already priced into the market. So I think now there are still some open questions and we're waiting for more details. What kind of an aid request has that been? Who will really participate? The EU, EFSF, IMF. I mean, it's pretty sure that the IMF would also contribute. And so we're waiting for more details, basically.
Now, we are expected to get a rate hike from the ECB today. Is that going to be a mistake, given the state of the European debt crisis here?
Well, that's the kind of the ongoing debate. Of course, bear in mind that Portugal is a rather small country in the Eurozone, and the ECB pretends setting interest rates for the entire Eurozone. And in a way, actually, Portugal asking for help and hence being protected a bit and having a program that will be controlled by external sources frees up the ECB a bit, not only on interest rate setting, but also regarding the banking sector. Remember, there are a lot of these addicted banks that the ECB is not happy with. When you know that actually there is a plan that they will look at capital ratios and so on, it will be easier for the ECB to actually set interest rates and also conduct the liquidity operations.
Well, this is it. The ECB almost has to come up with a policy that, well, it has to come up with a one-size-fits-all policy, but it's going to get creative here, isn't it? Just explain the different things that it's looking at to try and make this policy for a two-speed Europe.
Well, I mean, of course, at the moment, we still have this split between liquidity provisions for the banking sector, where we have technically still quite a generous framework, i.e. full allotment, and also more generous collateral requirements. So there, really, the ECB still shows its generous side, and bear in mind, the functioning of money markets is really one of the primary remits that the ECB has. So it is also their responsibility. At the same time, you have the inflation and price stability mandate, which, of course, they now put much more forward since they've announced or pre-announced a rate increase at the last meeting. I think, you know, as we continue to have these tensions between liquidity provisions, the money market, and interest rates and the inflation outlook, we will continue to doubt what will be, the path of ECB interest rates. At the moment, we just think they will engage on a soft tightening cycle throughout
What does that
this
mean?
year.
What does that mean, Astrid? I mean, the market's pricing in three hikes this year, bringing us to 1.75% by the end of the year. Are you expecting that? Also, what does that mean for Spain? Is Spain going to be next here?
We have the same expectation, 175 by the end of the year. You mentioned it yourself in your report before that, of course, Spain will feel this as well, as they have floating mortgages that are fixed according to the one-year Euribor rate. One note, and we know that this will have an impact on Spain. One note, though, if we always compare Spain and Germany, also bear in mind that when interest rates are low, rates in Germany do not fall as much as they do in Spain. So in a way, you start from a lower base in that country than in Germany. So maybe, you know, this is also something worth keeping in mind when we have this debate. Otherwise, remember last month when we had the pre-announcement, there was some speculation, could they come forward with a 50 basis point hike or maybe back-to-back 25 basis point hikes? I think given the last global events that we've had, this is pretty unlikely, and they will play it carefully and watch the data and avoid as good as they can having an outright shock in the periphery.
Astrid, just very quickly, the Bank of England is going to wait and see, we think, today. But when do you expect a hike from them? Their inflation here in the UK is certainly higher than it is in the EU.
Yeah, it's certainly higher, but our call on the Bank of England is different. We think the first rate hike will only occur in Q1 of next year. And actually, this divergence just reflects on how differently you can view economic positions at the moment, whether inflation is perceived as being temporary, whether you also have outright debt problem that you still deal with, you expect more deleveraging, that would certainly be the case in the UK, or whether you think actually you are in a sustained economic upswing and you have to manage inflation expectations, and that would be the ECB's approach.
Thank you very much, Astrid Schilo from HSBC there.